Hey guys, Keel Stokes here. Welcome back to another episode of The Trading Edge, the weekend edition. Most of you guys are quite familiar with who I am, but if you are brand new, I am a Forex trader, I'm a trading coach, and I'm one of the co-founders of Tier1Trading.com. And this is a weekend video that I do showing you guys a look around the markets and talking about the top trading ideas that are on my radar. Now, I do two versions of this video. I do a YouTube version where we concentrate on a single setup, and I try to give a nice little lesson that will be helpful in your trading. And I also do a full version for our Tier 1 members, whether you are a trial member or a premium member. By the way, if you're not a trial member and you're interested, you can take our 14-day trial on the platform, test out our software, interact with our community, join us in our live rooms, take some training lessons, all for $1. Just head over to the website and check it out. There's no auto bill on that or anything like that, so you don't have to worry about going right into a premium membership. Once you're done, your membership just ends. But if you can't tell, I am in a great mood today. It is Friday. I got a lot accomplished. The USA just beat France in the World Cup quarterfinals. England, you're next. We got some Gold Cup action going on Sunday. We got Copa America today. It's just it's a great time to be a sports nerd. I also had a very profitable day in the market, or week in the market, getting back into the triple digits as far as pips go, which is good. Wasn't as good as my buddy George, who banked 200 this week, but just halfway there. I'll let you have it this week, George. Anyway, we're gonna have an interesting conversation in today's weekend edition of the Trading Edge. We're gonna talk about really swing trading and the benefits of being able to set up and know your setups inside and out well in advance, and the effect that it can have when you're trading and your trading psychology. But I first want to cover a nice little comment I got on YouTube. If you guys haven't listened or subscribed or seen it already, I have a podcast called the Trading Coach Podcast, and I do 3 episodes a week. And the most recent episode that I put out was episode 202, titled Knowing When It's Time to Change Your Trading Style. And it was a conversation that we had in our live room about when to make adjustments. I make adjustments every quarter. We're getting to the end of the quarter, and I was telling our traders about some of the adjustments I plan on making. And there were 2 really good comments that came up, and one of them talked about it. It said, Akil, when you first got started, how did you realize, or what did you do to deal with the fact that, I guess, understanding that the trading style that you're currently trading right now may not work in the long term? And I did nothing. Honestly, when I first started, I assumed that what I was trading a single strategy to start. I assumed that what I was trading would work the same way forever. And it's because I didn't have any experience in the market, right? It worked well during my back testing, so it did work over different market conditions, but I really had no idea on, how market conditions would change in the future. So when I first started, I had one way of trading. It worked well. I assumed it was going to work well forever. And I'm always one that had tried to evolve as a trader. I think it's due to the fact that I don't trade simply because I want to make money. I'm truly passionate about the markets. I like the game of trying to figure things out and making predictions and trying to get a little bit closer each and every day to mastering the markets, even though that's something that will never happen. It's kind of like, the carrot dangling in front of my face. But something I learned throughout my experience is that I need to become an all-around trader, right? I need to be skilled at the skill of technical analysis and just not know a strategy. If I know one strategy, that's okay. It can make me money at the time, but if market conditions change, it doesn't allow me to have the ability to really adapt. Imagine it like a player that has one trick. I don't know how many guys are familiar with NBA basketball. We have a player on the Philadelphia 76ers named Ben Simmons, where he can do one thing really, really good, but he's limited in other areas. And it works good during the regular season, but in the postseason, in the playoffs, where teams have a chance to scout him, it's very easy to shut him down and he becomes ineffective. And the same thing can go for your trading strategy, right? You have to be able to adjust as the market adjusts. And if you are just skilled at one thing, if you know a strategy, but you don't really have the skill of analyzing the markets and reading price action, you're stuck. And that could be a detriment to your trading. However, if you are well-rounded, if you have the overall skill of reading price, the overall skill of technical analysis, not only does it allow you to really shift to a style of trading that works with the current market conditions, but it also allows you to make adjustments to the strategy that may not be performing well at the time. And that's kind of what the podcast episode was about. I can go on forever about it, but if you want the kind of the full conversation, just make sure you watch or listen to episode 222 of the Trading Coach podcast. It's here on YouTube. It's also on every podcasting and music streaming app out there. So without making this too long, let's get into the video. Tier 1 members, premium and trial members, we're going to kick things off by taking a look at the news. It is going to be another busy news week. It's also a shortened week. So expect some massive movements in the market this week due to the news events that are coming out. And for you guys watching on YouTube, we're going to get right into the charts. I believe we're going to talk about the Euro Aussie and talk about an at-market trading position, as well as one that should be on your radar for maybe weeks ahead. Are the 3 news events that you want to pay attention to. Now, let's head over to the charts. I had my VS1s on here. I am going to put those back on. We'll leave them off. But I want to start off on Euro New Zealand. There's not a lot on my radar today. The markets are kind of dry, which I'm not complaining about. As I mentioned before, I made good money this week, so I'm happy. But let's start off with Euro New Zealand. Let's just ask ourselves, let's go on the daily. Let's just ask ourselves, where are we trading at, right? So that good old-fashioned IPDE, identify, predict, decide, execute. What has the market done? What is the market currently doing? Well, you can see the market has currently broken a previous level of resistance to the upside, and we are coming back to a previous outside return. If we just kind of draw on our ebbs and flows, which I would suggest all of you guys do, no matter what, no matter how experienced you are, just to give you kind of a nice visual. You can see that we put in a new structure high up here. It was just barely, if you check the candlesticks. And then we double topped, right? So we retraced, we pulled back in the previous structure looking left. We refused to create a higher high, and now we're going back down to our previous outside return. So this is a sign of a weakening trend, right? A deep retracement, a refusal to put in higher high, higher close. Now, it's not a violation in trend, but it is a weakening trend. And for you guys that are on the platform, I just finished this section this morning for the Foundation Course 2.0, where we dig a little bit deeper into kind of the signs of weak trends and strong trends and how to know when the trend is speeding up or kind of when you're in the meat of the trend, the best place to take it. And then how do you know when the trend is starting to slow down and when you should be maybe a little bit more conservative about taking targets or just on the alert for a potential reversal. So, my mind, I have a little bit of a confirmation bias when I'm choosing what pairs I look at this weekend because, that's already on the mind from the course material. By the way, Naomi asked this morning or yesterday about when the course will be out. I had to add a few more things in there, guys. I actually finished it, and then I found a random notebook with more notes in it. I've been taking suggestions from you guys on the platform as well. So I've been kind of going back in and adding stuff because I feel like I left stuff out. But the plan is either the last week of July, first week of August, to have it released to you guys. So coming soon. But you can see that we're at previous structure, right? We're testing our previous outside return. This is going to be our decision point because remember, this is the point where if we violate it, the current bullish trend is going to be invalid. If we hold it, we could see consolidation, but we could see a continuation move as well. Now, this is also an area that structured traders should be interested in because, well, if we could see a reversal from this area, and if we do, it offers an opportunity to get involved with very, very low risk. And I say very, very low risk because, well, we're right at previous structure lows. So if you're wrong, the market doesn't have to travel that far for you to know you're wrong. It just has to violate previous structure. Then you can get out of the trade. And that's something that a lot of traders fail to realize is that a stop loss isn't just a random place. A stop loss shouldn't be placed off of a certain amount of pips. Ooh, 10 pips sound good. Let's do it, right? Or I'm going to make my stop loss half my reward. That never made sense to me, right? And even Tony, matter of fact, Tony, who's been on our platform for a while, if you guys don't know him, you haven't been in the chat, but Tony, who's been on our platform for a while, hit me up the other day and said, Akil, I watched one of your older videos and something just clicked. And he's someone that has been using ATRs for stops for a while. And I use ATRs, but it's always secondary. And he came across a video where I was talking about the importance of structure and how, it is your safety net. And it should be if we use structure to identify the violation and continues of trends, we should use it as a place to not only shoot for targets. And in my opinion, I'm highly structure biased if you can't tell. But it should be a place we should use for protection of stop loss as well. As he said, it kind of something clicked where he's going to start mixing his old way of taking stops and just making little changes to him based on structure to put himself in a safer position. So I've always believed in that. Just don't have random stop losses. Put a stop loss in a place where you know you're wrong. Because from personal experience, I can tell you what, it sucks to get stopped out and then have the market reverse, go to where your targets would have been, and then look at yourself and say, well, you know what, I was right, but I'm not in the trade. That is probably the worst feeling. So structure-based traders, you can take a look in here for any type of structure-based trade. If you're looking for a more aggressive reason to get involved, we had this earlier in the week, and it is still technically valid and giving you a slightly better entry. Now, how many of you guys can, never mind, how many guys can see what I'm seeing? I kind of accidentally drew it on there for you, but let's see if you can, how good your eyes are. I'm gonna sip some water here. Oh yeah, that's good. Yeah, we have a potential advanced pattern formation here, right? If I take out my pattern drawing deal, we started our previous outside return here. We take that from our swing high to swing low. It's gonna be our X to A. Or excuse me, our swing low to swing high is gonna be our X to A. This retracement right here, right now, check it, because this is gonna be different depending on what platform or what data set you may be on. You see that I just barely missed it. I have a 49.9, so I just missed the 50%. But when we looked at this during the week, right, there were traders that did hit that 50% retracement. So always check your data, right? Mark Douglas said it best, or Larry Pesavento said it best in his book. Trade what you see. And in this instance, it could be a tenth of a tick off. You may have a valid pattern here. So if you do, right, you have a bat pattern that completes right down here, or which completed right down here at the 886, and it's still valid because we haven't broken that X leg. So that can be an at market buy for you, say on the open. Or, of course, if you want to treat it more like a structured trade, that's something you can look to take and really add it to your CTS score. Now, what's interesting about this is we talked earlier about the trend potentially slowing down, right? So let's say we do get a retracement off of this pattern. Let's say the pattern formation wins, or the structured trade wins, and we start to get a move up, let's say to this this level right in here, right? Previous structure inside. Well, if we zoom out, right, that's going to give us another potential setup, because we talked about the trend slowing down, the loss of strength, maybe getting ready for a reversal, right? What would happen if the market came right up here? What would this give us? What do you guys see? I know there's a lot on your chart, but practice kind of seeing in between the lines. Well, that could potentially be the right shoulder of a potential head and shoulders pattern. A head and shoulders pattern is a classic reversal pattern. The head and shoulders isn't technically valid until we violate this neckline, but there are methods to trading the right shoulder. And of course, the sooner you can put this on your radar and start predicting the right shoulder and then waiting for the movement off that right shoulder, you can start planning how you want to attack the trade. I had a good buddy of mine that came into the office today, a couple days ago, not my home office. I've been using my other office because I feel more productive when I'm out of the office, and trying to drop some pounds too. And I do a little bit better when the fridge isn't right around the corner. I don't get caught up with the temptation to get the nibbles. So that's been helping as well. But he came into the office and we had a nice chat about trading. He wants to get involved in trading. I spoke to him a few years ago. And now he feels as if he's in a better place. He's got a job that he's happy with. He's excited. He's running on autopilot, meaning he's very efficient with how he does it. And now he's looking for the next level to kind of supplement his income and bring more to the table. He's interested in getting into trading. And we had a conversation about swing trading, and his question was, how much time do I have to invest? He's not interested in staring at his charts all day like a day trader would be. And I told him very little time for a swing trader. If you have something on your radar, maybe you have to check your charts once every 4 hours. But if you do a good job of analysis, you should be aware of the opportunities at hand well before they happen. So let's say you are a head and shoulders trader from a swing trading perspective, right? We're just testing the neckline right here, right? June 28th, we're just testing the neckline. It'll probably take another couple of days, if not a week, to get up. If we retrace up to this level, it'll probably take another couple of days, if not a week, to get down here. And I say that because you can, realistically have this trade set up on your radar for 2 weeks in advance. And that gives you plenty of time as a newer trader to go back through your notes, go back through the training course, make sure you're doing everything correctly. I guess on the other side, it can give you the opportunity to get kind of the paralysis analysis where you look too deep into something that you sabotage yourself and your mind goes all backwards, right? You ever take a test in school and you know the answer, but then you start overthinking it. So that is a downside which can happen. But assuming you worked your behind off to become a good trader, consistently profitable trader, that shouldn't be a problem. But the point is, he has 2 weeks in advance to set this up, know exactly what he's going to do, and that's going to put you in a comfort zone. There's no panic of, oh my God, we just broke structure. How do I do this? How do I do that? No, he's been waiting for 2 weeks, rehearsing it in his mind, right? Rehearsing in his mind. If the market does this, then I do that. If the market does that, then I do this. Just every day rehearsing and rehearsing and rehearsing. No different from an athlete running through plays in practice. I remember in football, we used to rehearse the first 15 plays of our game over and over and over again. So when the game happened, we always started off in a comfortable mindset because we knew exactly what we were supposed to do over and over again. It kind of calmed the heart down and got rid of that panic. We can do the same thing in trading. And that's the cool thing about swing trading is if you're good and if you're doing the consistent job of analyzing the market like you're supposed to, you can find these opportunities way in advance, and having that comfort level will help you cut down on those missed trades. So a few things here. There's a trade at market for a buying opportunity, and then there's also going to be another potential reversal, a selling opportunity, either at the right shoulder, if you trade that way for head and shoulders patterns, or at the break of the neckline or the break in the retest. You guys can go back through the course, head and shoulders course, if you kind of want the 3 ways to trade this thing. So pretty good setup here on Euro New Zealand. Just remember to check that B leg. Make sure it's 50% and not 49.9. All right, let's head over to Canada Yen next. All right, so I hope you guys enjoyed this video. As always, please take a second to do 3 things, right? Like the video, right? Click that like button. Share this on social media, whether it's just a retweet or whether it's in your Instagram story, and leave me a comment below. I just mentioned some comments at the beginning of the video that led to some very insightful conversation. Take advantage of that. I know for you guys that are on a tier 1 platform, we have the luxury of having that community. I like to have the same thing here on YouTube. And for you guys that are very invested in your trading, it's worth going through the conversations, the comments underneath these videos, and seeing what other traders are thinking, because it's not just questions from newbie traders. It's comments from very experienced traders lending their opinion on either something I said in the video or maybe something completely off topic in another realm of trading. But in my opinion, if you truly want to be successful at trading, you need to immerse yourself, and you should be looking for any type of educational edge you can get. So I'll see you guys next week. Have a great weekend. Go USA. And until next time, plan your trade, trade your plan. You guys take care.